Welcome to the Versa Business Tips Podcast. I'm your host, founder and CEO of Versa Business Systems, Shaheen Masloom. We're here with a special guest today. My partner, my friend, Shawn. How you doing today, brother?
I'm killing it, sir. How about you?
Good, man. Good. Feeling good, man. Finally, some warm weather here in Maryland. I'm feeling good. So for those out there that don't know you, Shawn, tell us a little bit about yourself and what you guys do.
Yeah, sure. So I appreciate the opportunity. So my name is Shawn Bacoccini. I'm the co-founder of the Better Tomorrow Financial Group. We are in our 10th year of operation. We specialize in tax programs, rebates, and incentives for businesses, of which there are many. You know, we kind of see ourselves as Robin Hood for the business owner.
Right.
The only difference between us and that movie, which is one of my favorite movies as a kid, is that we don't have to steal this money and give it back to the people that are being overtaxed. Business owners are just unaware of the fact that they're overpaying and they're entitled to get some of this money back. Just don't know how. Right. Why does Amazon pay less in taxes in terms of percentage of revenue than the average small business? Is because they're paying millions of dollars to consultants to save them billions of dollars. And they're just simply teaching them to leverage these programs that the government put in place to stimulate business in the first place. So that's what we do. We just bring this to their awareness.
Right. Yeah, it always blows my mind the amount of programs that are really out there. And you bring up Amazon, and even Amazon isn't taking advantage of every single opportunity that's out there. You know, there's constantly new opportunities and new tax breaks and codes coming out. And, that's why I wanted to talk to you to get as much information out there as possible to these small business owners that really just don't know the different ways other than saving the receipts and writing as much things off as they can, right? There's so much more to it. So, expand a little bit more on that. Like what are some of the main programs that small businesses could be taking advantage of that a lot of them just don't know about?
Yeah, so I'm not a political guy, but I can tell you that, when Trump was running for office, his team did a really good job of leveraging this and kind of using that platform, saving American businesses, right?
Right.
And an example is Carrier Air Conditioning, one of the largest HVAC brands and manufacturers in the country.
Right.
They were getting ready to shut down multiple factories, and they were going to send like 2,000 jobs in these huge operations to Mexico.
Wow.
And the campaign came in and said, hey, listen, you're missing out on these programs. We can save this business. Now, they didn't whip a check out of the campaign budget and save Carrier Air Conditioning.
Right.
They simply had consultants on their team to teach them how to leverage, how to access these programs that they were entitled to. These programs, go in the way of research and development tax credits. If you own property, there's cost segregation breakdown. And then you got to think, workers' opportunity tax credits or WOTC, workers' comp, multiple different commercial utility cost reduction, shipping and receiving, as you know, merchant services and payment processing. The list goes on and on. There's over 1,100 government programs active now. We specialize in about a dozen that we know even the smallest business owner can benefit from. And for us, do we have large accounts and large brands, some of which you and I are working on together? Yes, absolutely. We can hold our own at that level because those guys get it. But if we boil it down to why does Amazon, and if we go PPP, ERC, when that COVID relief money came out, which is just, think of it like FEMA. It's just disaster relief money. It's always been there. They just used it for COVID, right? Well, small business owners were pissed because PPP disappeared by the billions and trillions. Why? Because the large companies had consultants on their team that said, hey, here's this money, let's go get it, right? Same goes with the bailouts. And so for us, why do we focus on those businesses? Because they need it more. And listen, even if we're only putting $20,000 in the pocket of a small business owner, that $20,000 can be a material change for that business owner. Sometimes it's the first time they can take a profit or give holiday bonuses to their employees, right? But again, we're just doing the exact same things that these big four the huge accounting firms are doing.
Right.
They don't do it for smaller companies because the juice ain't worth the squeeze. The same amount of work that we got to do to get a small business $10,000 or $20,000 is the amount of work that they got to do to get those large companies billions of dollars, right? So they just don't pay any attention to the majority of businesses in the American economy, those smaller businesses.
Exactly. And that's kind of what sets us apart, right? Like we want to help the small businesses. Don't get me wrong. We love helping the large ones, right? But like you said, it takes the same amount of work to help a small business that it does to help a large one. So, with research and development, right? So when we first started talking about research and development tax credits, I'm like, well, we don't do any research and development. I think a lot of small business owners probably are thinking the same thing. Can you give us some of the examples of some of the research and development things that small businesses do on a regular basis that actually qualifies under that?
Yeah, absolutely. So most businesses do now, like a fitness facility who just purchases a property and fills it with equipment. There's no real R&D associated with what they do, but a physical therapy clinic who has to come up with different methodologies to help their clients recover, to help athletes better perform, to help me recover from an injury
Right,
faster. If that physical therapy clinic is coming up with these types of processes and refining and modifying the way that they serve their client, that counts. I remember my first company was a janitorial company. We were absorbed and bought out by a local Molly Maid franchise. And what I didn't know then that I know now is that the owner and the employees were always trying to come up with different ways to, like, let's say for example, you got to scrub a toilet, you need some water in the toilet, but you don't want to
right,
flush, because if you flush then all the water is gone and then it fills up quickly. So they were always coming up with different ways to, like, plug the water, clean the bowl, and then drain it without energy waste and without wasting chemicals, etc. So they came up with these little techniques
right,
to do their job better, faster, with more efficiency, so we don't lose chemicals and time, right?
right,
That counts as R&D. So most businesses, you made the comparison a while ago, like keeping their receipts. So
right,
when my first mentor was teaching me about these tax programs, he compared R&D to vehicle mileage. Most people that could, claim and get these deductions for their vehicle mileage don't. They just
right.
don't track it. They
That's
don't claim
crazy.
it. But if we use vehicle mileage, for example, is like everybody's entitled to some amount,
Right,
right? So think about it like that. Every business is probably entitled to some amount. The amount that you will get will be relative to the amount of research and development that you've done. And that's
right,
where we come in. We bring them in, we take them through this process, and we identify in what ways they performed R&D and what they're entitled to. It's probably going to be something. The question is how much, and how
right,
creative were you in the process? And then another one I really like to touch on is cost segregation. If you own commercial property, the government wants you to be able to sustain and maintain that property. And so they will come in and say, hey, listen, this property is going to generate X amount of revenue, create this amount of jobs. You own this equipment in this location. We're going to give you an annual incentive that you can use to maintain that property. And they'll build out cost seg for 10 or 15 years. And we're
right.
talking hundreds of thousands of dollars that the
Yeah.
business gets to keep if they own the property, because the government wants them to keep creating jobs and keep creating tax revenue.
Yep. Yep. Now, you know, for these large businesses that have people, they have staff that are, looking for these programs and finding these things. And, does a small business have to pay us or you to find out what programs that they qualify for? Are they coming out of pocket? Do they have to hire you on a retainer? Like, how easy is that for a small business to say, hey, Shawn, how can you guys help us save more money on taxes or take advantage of some of these tax credits?
Yep, that's a great question. And I want to make the disclaimer, no matter how large your company, chances are you're not taking advantage of all of these programs. Shaheen, you and I talk to large businesses every day, and we get them on
Right.
the call for our lead-in
Yeah.
product, which we'll talk about here in a minute. But I always ask them, do you own your property? What's your tax expense, your medical? And throughout the process of that consultation, we realize they don't know about some of the most basic and some of the highest return tax programs that are available to them. So
Yeah.
even if they are a large company and they have people on their team, to answer your question, they have to pay a consultant to come in and do the analysis before they
Right.
even know what they find. With us, they don't. We could charge high ticket for these
Right.
consultations just to
Oh yeah.
identify the savings, but we don't. Every program and every product that we offer these businesses, it comes at no cost on the front end. And pretty much all of them, there's some that are net neutral, meaning that the tax incentives pay for themselves, including our management fee.
Yeah.
But let's say it's something after the preventative health initiative, we're looking at R&D or cost seg. What we'll do is we'll identify the savings, we'll do the work, and then they'll
Right.
just share a piece of the pie with us. Like
Yeah.
if we saved you $200,000, we just want 10 or 20%. It just
Right.
depends on what it is. But again, like even 10 or 20% after the fact, right,
Yeah,
is
they're not coming
significant.
out of pocket anything. They're not having to pay for the consultation. Like they literally have nothing to lose by having that conversation and say, "Hey, look, like where can we help you?" I mean, I remember one deal we were saving them like 300 grand
Yep.
a year, and they were a small business. Like
Right.
that changes not just the trajectory of the business, but their lives, their kids. I mean, it's like
Yep.
it's amazing what you guys do, man. Like I'm so glad we got connected, and I
Well,
think
and
we got
again, this
connected randomly through social media, right?
social media, yep, yeah, which
Yeah.
you do a great job at that, right? But
Thank
you know, the reality is that most people are just oblivious. Like if I'm presenting to a group, like we presented to an HR roundtable in a community the other day, and my favorite line is like, "Yo, how many people here have an Amazon account?" Everybody raises their hands. I said, "How
Right.
many of you know that there have been years that we spend more money on Amazon than Amazon paid in taxes?" And nobody raises it. They don't
Right.
know
Yeah.
that these things are available to them. And for
Yeah.
us, it's just a matter of our company is Project Blue, right? The DBA is Project Blue. Our logo is a blue apple, and the
Right.
reason it's a blue apple is because it's like people are familiar with apples, they never seen a blue apple. So
Right.
it's like, what is this? We're like, no, it tastes better and it's better for you. They're like, nah, that sounds too good to be true. But if we
Right.
take them through the process to explain to them just a little bit what's going on, next thing you know, they're like, I do want to take a bite of this. It
Right.
does sound better. It does make sense. And although, again, everything we're saying probably sounds too good to be true on the front end, the reality is we did it that way intentionally.
Right.
If we're any good at marketing and sales, we're going to design an offer so irresistible, you would feel stupid to say no. So if we
Exactly.
didn't package it and position it like this, then we wouldn't experience the growth that we do, you know? And
Right.
so
Right.
we're trying to make it a no-brainer, but you wouldn't believe how hard people make it to give them free money.
Yeah, it's crazy. Like even when the one thing I love that you guys do is you show them literally the tax codes. This is on the IRS.gov website,
Right.
all these different tax codes that make these programs. And even then it's like, well, and it's eventually they move forward, but you're right. Some people, they have that. It sounds too good to be true, but hey, it sounds too good to be true that Amazon's making billions
Right.
and what they get a tax refund, I think,
Yep.
right? Like,
Well, and Walmart, for example, Walmart
yeah,
is the largest felon-friendly employer. They're the ones that really kind of, I won't say they pioneered WOTC, but they leveraged it. The Workers' Opportunity Tax Credit for
right,
veterans, for folks with disabilities, for folks with, issues in their background. There's something like a 25%, right, tax incentive or rebate as long as they have clocked, 140 hours. So it's like,
right.
they don't have to be working with you for very long for you
Yeah,
to get back a significant amount of the taxes that you pay per
right.
employee. And so Walmart ran with it, and they leveraged it and they used it really well.
Yeah. I mean, that's the thing, it's like if they just know about these programs, it's really easy, to leverage it. It almost blows your mind like, man, why have I not been taking advantage of this stuff forever? Like
Well,
when you
and
think about what you could have saved from the start, it's like, man, it's mind
well, for
blowing.
a lot of these programs, we can go back 3 years in
Right.
arrears, right? So
Oh, really?
they've been overpaying the last few years, and we can get that money back for them. But the answer to your question really is like, why do more people not know about this, or why do they get nervous when we present it to them as if it's too good to be true? No matter how big or small the company, most of them, they have a CPA, right? They
Right.
have a benefits broker. They have somebody in their circle or on their team who they trust or pay,
Right.
right, to certify these things, right? And unfortunately, a lot of times these people are not trained in these specialty
Right.
programs. And so CPAs, their job is not to find you money. Their
Right.
job is to help you protect and report your money the right way,
Yep.
right? And
Exactly.
so we've had some clients fire their CPA because their CPA said, no, like this doesn't
Oh
make
yeah.
sense. And it's like, dude, look, the IRS just cut us a check and we got 50K yesterday. Now you're telling me I can't take it? Like that doesn't make
Right.
any sense. Why would, if it's illegitimate, why would that even
Yeah.
happen in the first place, right? But I always compare it to doctors and CPAs. If you take medical professionals, they are
Right.
required to go through all of these ethics, but they sign, they make a commitment, they take the Hippocratic Oath. They are ethically required to say what's in your best interest and what's not. And so if I were to ask my, cardiologist about a back problem, he's going to be like, look, I can tell you what I think it is as a medical professional, right? You should probably exercise, right?
Right.
But I need to refer you out to this specialist whose
Yeah.
only job is to help identify, diagnose and prescribe a treatment for your back problem. I
Right.
focus on the heart, he focuses on the back. Go talk to my guy, right? Well, unfortunately, CPAs never signed a Hippocratic Oath. And so if
Right.
they don't know about it and their client brings it to them, they feel threatened by it, right?
Yep.
And they have to defend their position. And again, it's kind of like egg on the face. It's like, because anytime somebody says, well, this doesn't make sense to me, but my CPA will understand. My
Right.
first question is always, Bob, do you think if your CPA knew about this, he would be
Right.
hiding it from you?
Exactly.
What do you think?
Right.
He's like, he doesn't want you to take advantage. He just doesn't know. And if he doesn't know and we bring it to him, what's he going to say?
Right.
He's not going to take, we did a podcast interview with one of our clients who is a CPA and he works for school districts and municipalities. And we brought it to
Right.
him. It passed. He understood these programs. It passed his compliance. He's like, look, I got 24 employees. Let's just implement it here. And then
Right.
I'll take it to all the school districts because if I'm participating and I
Right.
endorse it, then they're going to do it. And I asked him like, well, why do you think you're the first CPA in years that I've heard, take that opinion? And he's like,
Right.
well, man, like what we do is a lot of work. There's a lot of compliance. There's a lot of paperwork. And so most people either kind of lazy, they don't want to learn a new thing, and they think you bringing something more in is going to create extra work for them, or they're
Right.
just afraid to lose the account or do the wrong thing because they don't specialize, right? So it's
Right.
like if you're listening to this podcast and you think, well, why doesn't my CPA tell me about these things, or what is my CPA going to think of this? The reality is they probably don't know. Not their
Exactly.
fault. It's not the way the industry has taught them to be,
Yep.
but I'm happy to have a conversation with them if they're interested
Exactly.
in learning, because again, we can prove with all of the ERISA attorneys and forensic CPAs and all of the
Yep.
proof that we need that what we're doing is legitimate.
Yep, exactly, and it's not just in these like wild, these programs that are out there, tax credits, and the Preventative Health Initiative and R&D and all these different things. Like I had a client of mine. I think it was like the first year I was in outside business to business sales,
Yeah.
and I was it was a vacuum company. And I walk in, and the guy hands me or he says, "Go next door to my accountant. She has the credit card processing statement for you." And so she hands it to me, and I'm sitting in her office, and I realize these guys are paying 10%. So they had $100,000 in credit card processing sales, and their fees were 10 grand. I said, "Man, do you realize you guys are paying 10%? No, we're not." And I said, "Okay, hold on one second." I walked outside of her office, walked to the owner's office. I said, "Sir, you guys processed $100,000 last month. You paid $10,000 in fees. What's your profit margin?" He said 14%. I said, "Well, 10% of that is going to your credit card processing bill." Sadly, he fired her on the spot. It was the most awkward situation I'd ever been in. But I learned a lot from it, and you're right. Like accountants and CPAs, they're not an end all be all for business.
Nope.
It's never going to be that way, right? Like there's a reason why your Amazon, your Walmart, your UPS, whatever it is, have these massive teams of employees
Right.
just for their financial department and just for their marketing
And
department.
listen, if they are your CPA or your trusted advisor, they got there, they earned that spot.
Right.
That is not in question, right?
Yeah.
But if they don't know about these things, it's not their fault, right? The
Exactly.
problem is human nature if you bring your benefits broker in to talk with us about this wellness initiative, or if you bring your CPA in or your attorney in to talk with us about tax law and compliances, and they're not experts on it, they are going to be defensive. Like I say all the
Defensive,
time,
yeah. Yeah,
what
I
do
see the whole
attorneys do? What do attorneys do? They do their job. Their job
right.
is to create billable hours and pick a fight.
Yeah.
Right? So, right. And again, defend and protect, and they're doing
Yeah,
their job. They're doing their job, right? Unfortunately, again, with the CPAs, it's not their job to learn and understand this stuff because these
right.
are specialty programs. And so, or the benefits broker,
Yep.
right? So when we bring an outside vendor into this conversation, they feel like it's their job to defend their position,
Yeah.
right? We're bringing in programs at no cost that they're charging you for. They are
Yeah.
an expert at something that is relative to what we do and they don't know about it. So it's human nature. Of
Yeah,
course, they're going to be
100%.
like, no, 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 this can't be.
Right.
They're going to do everything they can to protect their account, defend their position, and shut it
Yeah.
down. So in a lot of ways, it's like a conflict of interest. It's like,
Yeah.
if it were me, if I was a CPA and somebody said, yo, this thing and that thing, come and talk to these guys about it. I'm like,
Right.
that's not worth, I don't know anything about that. That's not, I am
Exactly.
not doing you or myself a service by coming and sitting with the vendor talking about something I don't understand. Like
Yeah.
we might need to bring in somebody else to have,
Exactly.
that would be
Well,
the ethical thing to do, but it just never happened.
exactly. Yeah, yeah. I mean, like the big guys, right? Like we're talking to a massive insurance broker. They put it through a compliance. They
For
passed
months,
it.
it's been months,
Right?
it's been months.
Months. But eventually they're like, okay, this makes sense, right? It's not taking money from them. It makes their clients happier. Like it's a no-brainer, right? But like I think they're the largest in the world, right? Like it's not like a small CPA one
But
man,
they have an
company.
entire team
Yeah,
dedicated specifically to the tax compliance of this thing, right? And so
exactly.
that's the reason that it held water and passed the test,
Yeah,
right? Because they have people whose job it is to learn. And this is, I think, just the moral of the story, if you're listening to this conversation, is that if you don't know, that's okay. If your CPA, your attorneys don't know, that's okay. That doesn't mean that it's illegitimate, right?
yeah,
And we provide 100% audit defense and all of the ERISA and legal compliance and tax codes and everything that needs to be in place for us to help you.
right.
We've been working on that for 10 years. Like
Yeah,
there's no way that we could have made it this far if we didn't check all those boxes and cover all those bases
exactly.
so that we are protected, therefore
Exactly.
you are protected.
Right, right. So let's talk about the Preventative Health Initiative, right? So this is probably the coolest and best program out there, right? It's not only helping the business, the owners, the employees, their employees' families in so many different areas, right? Like explain a little bit of, the basics about PHI, how that works and how small businesses can take advantage of it.
Yeah, so the Preventative Health Initiative is a government sponsored program incentivizing business owners to introduce their employees to a wellness plan. The Affordable Care Act, was very effective in its implementation of rewards and penalties if you do or do not offer benefits to your employees. Now,
Right,
these cafeteria type programs or Section 125 programs, they've been in operation since the 70s. We've always
right,
known that the better we take care of our employees, the higher the morale, the productivity, the less their medical expenses. But recently, the ACA was so effective as a marketing engine, they decided to plug the PHI credits in there as well. So the Preventative Health Initiative is a simple, it's kind of a tax incentive which will be used to purchase ancillary benefits for to improve their own self-care. So if
right,
an employee has to pay for this stuff on their own, are they going to get a nutritionist? Are they going to get a physical therapist, a personal trainer? If they have diabetes, are they going to work with anything other than, what prescription was given to them? Probably not, right? But the
right.
reality is, like, let's take type 2 diabetes, right? I guess the question would be, where does this all come from, right? Well, if you know, like I know, when the government sees a problem, they throw money at it, right?
Oh yeah.
So the ACA was designed to get everybody on benefits so that it reduces the cost of public health. So people have health insurance and have copays provided by the employer, et cetera, right? Because otherwise we're going to end up sick. We're going to go to the doctor. We've got no health insurance. Then we're in a bunch of debt that we can't keep
Right.
up with, or
And who ends up paying that tab?
correct. Right.
The government.
Right. And so this one kind of like ACA phase 2, if you think about it, right? So this wellness incentive is designed to get them to take better care of themselves. If a person is diagnosed with type 2 diabetes, for example, right?
Right.
What we know is that the most expensive chronic illnesses are preventable lifestyle diseases. Type 2
Right.
diabetes is one of those. A simple increase in physical activity and change in nutrition could make it so that this person doesn't have sick. And when they've got the precursors, if they were to work with the nutritionist, they could heal themselves before they have
Right.
to permanently go on medication, right? So
Yeah.
preventable lifestyle disease, you know how many Americans currently now, of the 300 million in our population, how many are currently diagnosed with type 2 diabetes?
30%?
It's a third of the population,
Yeah.
100 million people.
It's
Okay.
crazy.
Now, if somebody is diagnosed type 2 diabetes, they're going to live another 40 years on average.
Wow.
Most of those years on Social Security and public health care.
Yep.
Our cost to treat that one person is about $600,000 for those 40 years of their care. So 600K multiplied by 100 million. You see the problem. When the government sees the problem,
Yeah.
they throw money at it. The problem is public health, the
Yeah.
money that they're throwing at it.
Exactly. Over the next 10 years, we're going to spend trillions of dollars on diabetes alone. How do we fix it?
Right, correct.
Yeah.
And so when people are like, oh, this is too good to be true, right? No, it's not. The government
No.
and insurance
They're going to
companies, both
save
the two
money.
largest influences in our economy, said, here's the
Yeah.
way that we do this. The ACA was effective for that. Now let's try it for this, right?
Yeah.
So here's the deal. The benefit to the employer for implementing this plan is an average $500 FICA tax reduction per employee per year, right? So for every 50 employees, you're saving, tens of thousands of dollars. You're looking at $20,000, $50,000 in savings, depending on how many employees you have. Let's just say you've got
Right.
100 employees in the group, right?
Right.
It's a $50,000 profit this year. So for those of you that have less than that, just do the math. $500 in your pocket this year for every employee that participates in the plan, right? For the employees who choose to participate, they're going to earn an average $1,500 benefit per year in the way of wellness coaching, virtual wellness coaching, very easy to use. It ain't a full-time, nutrition and fitness boot camp, telling you what to do every day. You get to select the information that's important to you. Is it diabetes or blood pressure, nutrition and fitness, smoking cessations, drinking, pregnancy, whatever it is that's important to you in your current lifestyle now. Fill out a little wellness assessment, and then we're going to coach you virtually on how to improve those things. The technology is designed specifically to create that behavior modification. So the benefit to the organization is there's 3 nails that I like to hammer. 1, cost reduction in the way of outpatient copay and savings for your health expense, as well as payroll cost reduction. 2, gifts that you get to give to your employees in the way of wellness coaching, and cash value life insurance that's permanent and portable and grows every month, because that's where the incentives are going. And 3, this is a done for you system, meaning the payroll credits, the employee enrollment, the education, the customer support, the management, everything's done for you. Wellness programs can be expensive and labor intensive to implement, right?
Yeah.
So those 3 value propositions are tremendous for any organization. We're going to do it for you. You save a bunch of money. You get to give gifts to your employees, and they get to be healthier in the process.
Right. Happy, healthy. What's
mental and physical wellness, as well as financial wellness.
Exactly.
Again, at a net neutral cost, no out-of-pocket expenses, because the plan
or the employee or the employer.
No change in their take-home pay. The plan is funded by the incentive itself. And again, that's the CPA Journal released the article. It basically said, we create this tax incentive, combine it with health insurance and a well-designed wellness plan. If we buy it for them, encourages them to take better care of themselves.
And so the tax credits are covering the cost of the benefits, and the business is actually profiting an average of $500 per year per employee after. So if you've got thousands of employees, you're talking millions, you got a few employees, whatever it is, it's more money. But that's not the best part. Even if the company didn't make a dime, happier, healthier employees produce more, stay longer. Like it's it's a no
Well,
brainer.
and so we were just presenting to an HR roundtable in a small community. There's like 30 HR and safety leaders around this table. It was just last
Okay.
week, actually.
Yeah.
Um, so one of them, said, listen, that all of those things are nice, but the fact that you guys are going to provide 30, 50, $100,000 in death benefit to our employees, are like, we lose an average of 2 per year. Many of them are because of some of those conditions, right? Because
Yeah.
they're in a small town. Nutrition is crazy. Self-care is not high. You know what I mean?
Right.
It's like nothing like a home cooked meal. Yeah, but that's not always the healthiest, right?
Right.
But it's crazy how simple it is to just make a couple of tweaks in our nutrition to be healthier. But anyway,
Yeah.
that's a conversation for another day. The fact is, this guy said, listen, all of those things are nice, but for
Right.
me, I went to 2 funerals already this year.
Oh yeah.
We pay them
Hearing
this
that.
tiny little term life insurance policy that's about $20,000. And although it's nice for the family to have that 20K, if their family member didn't have more life insurance than that before they got sick, so they're not really going to be able to get any more than that, we just gave them we gave them more than twice as much with this policy than we are currently giving them, and it didn't increase our expenses in any way.
Well,
Like, that's a game changer. And again, cash value life insurance, most people don't have permanent life insurance.
right.
Most people don't have whole life. If they have anything, it's term. You know some crazy numbers? Did you know that only 2% of term life insurance policies are ever paid out?
Really?
98% of the term life insurance policies that most of us are listening right now have,
Wow.
it's free money to the business. And there's 2
Right.
reasons, right? Term, it expires by the time you reach a certain age.
Right.
So if we don't convert it to whole life by that time, we lose it, right? So
Right.
only 2% of those policies on average ever pay out for one of 2 reasons. One, they're either converted to whole life
Right.
or they expire, right?
Yeah. So
And
it's
so
almost pointless.
it's pointless. I mean, it's there in case of emergency. It's
Right.
good to I have to have it. Why do I have
Right.
it? Because if something happens to me, I want my kid to be okay, right?
Yeah.
But whole life, which grows in cash value and can be used as an investment vehicle, like our plan has a living benefits rider. So now
Right.
they've got $50,000 extra in death benefit at no out-of-pocket cost. And we're going to pay about $1,500 per year into the cash value of that plan. With the living benefits rider, it means that once the plan grows some money, after a few years, they're looking at 5 or 10K in that plan that they can pull out and use
Right.
in case of emergency.
And it's tax free, right?
So the way cash value whole life works is that it's tax free. It's only taxed 1 time per year.
Right.
So I could pull the money out and use it. If I pay the money back, then there's 0 tax, right?
Yep.
If I don't pay the money back, it's taxed 1 time at 4%. But the crazy thing is, it is going to continue to grow and gain 9% interest as if I didn't take anything out of it, right?
Exactly.
And so,
I mean, this is how the Rothschilds built
Infinity,
that it's been around forever. It's how they built everything.
all of the high-level entrepreneurs that are doing their hundreds of millions have systems like this in their asset portfolio. I know people, you and I know, the organization that I worked with in the past, I know that that's the way we did 50 million our first year, right? Those of us that got money from that, we poured money into trusts and cash value and index universal life. And we just live either off of the interest, or we overfund the policy. As soon as it hits a certain level, we cash that money out. And again, it's tax-free, right? Well, I mean, it's taxed 1 time a year, but it's taxed
Exactly.
And that's, again, why do the rich get richer and the poor stay poor? Because the rich have people around them that want that money. So they're going to teach them how to grow that money for a fee. You want to get rich, find a way to solve rich people's problems, right? Well, why do the poor stay poor? Because they don't have money. So they don't have people around them that want to give them money and teach them how to get money and grow money. And again, this is one of those things that I really like to try to do for the small business owner who all they needed was a resentment and a coffee pot to start a business. They didn't know how much it was going to take to do that. We want to help give them as much as we can and then teach them how to use it. So if I can put $20,000 in the pocket of that person and then tell them, hey, we can show you how to invest that money and use that money and grow that so that you can come up with a legacy plan, right? Those are the things that really keep us going.
Oh yeah, 100%. So before we end today, let's talk about, we talked about, nutritionists, diabetes. What are some of the other benefits? So their whole family gets access to these benefits, right? So you've got, on top of that, there's isn't there a veterinary benefit that they get for their pets?
So the plans are constantly evolving based upon utilization. So
Right.
unfortunately, veterinary care is one that isn't there anymore. Nobody
Okay, so it
uses.
just wasn't, nobody used it. So I
Right.
got you.
And again, so what we're constantly, again, financial planning is included, which they would pay thousands of dollars for. We
Wow.
included it no cost because they don't know how cash value life works. And they're
Right.
probably not going to
So
sit
they get a
down with
financial planner.
Edward Jones and company because they don't think they can. But what if we
Right.
could teach them, hey, listen, like this is a way to, the average American family only saves 2% of their income, if
Right.
that. Well, we can teach these individuals how to save 30% without changing their lifestyle. We could
Right.
teach the average person to take a 30-year mortgage and pay it off in 10 years without changing their lifestyle, right?
Yeah.
Most people don't know how these things work, right? And so there's a high level of financial wellness, but yeah, mental and physical wellness as well. It's a very easy to use coaching program, which covers everything in the way of mental health,
Right.
physical health, any chronic conditions,
Right. I
pregnancy.
mean, and mental health is such a major problem in the U.S., right? Like I did an interview on NBC a couple months back, and that was really what we talked about most of the time. It's like 30% of the U.S. population has a mental health disorder, and it's something like 80 something percent don't have access
Right.
for any sort of treatment or counselor or anything at all.
Well, and the organizations that do have something in place, let's say, for example, they've got a benefits provider or they got,
Yeah, so let's
and
let's say a company has, health insurance. What is this giving them on top?
well, this is in addition to, right? So whatever they've got in place, we know that the technology is designed, it has to meet the government's compliance. So it
Right,
has to create behavior modification. But they don't have to come to the employer and ask their permission. Like, let's say, for example, they've got an EAP, an employee assistance plan in place.
right,
Because this is how most people would gain access to mental health or substance abuse or any of these, like, diabetes or a chronic condition. They've got to go to the HR director and say, hey, I've got this, right? How
right.
many people actually want to do that? Not a lot, right?
Exactly.
With our plan,
Yeah,
they don't have to do that. They just customize their coaching and they, select, what information that they want to get the resources on.
that's
But
great. So it's all telehealth. It's they can access an app and be
yep.
able to, book an appointment and do all that stuff themselves.
Correct. Yep. And so it's high level, it's interactive, it's customized, it's based upon their wellness assessment, their current condition, what's important to them, right?
Right,
And we just provide them, those resources in a way that we know that they are more likely to use them, and we know that when they do, the coaching will advance and improve those conditions. Otherwise, it's all for naught. If we are not
right.
actually helping them to take better care of themselves, then we're not meeting the criteria necessary, to implement the plan.
Yeah, yeah.
But again,
Absolutely,
it's
man.
just the way that I like to compare it is, like I said, cost reduction to the business, gifts we give to our employees, and a done for you system that doesn't require you time and money to help your employees modify their behavior to be more productive.
Right.
Right. And again,
Absolute no brainer.
that's what we think. And yeah, mental health is a big one of those that the reason that a lot of people don't get the help that they need is because they don't necessarily know and or because they don't want to tell people about it.
Right. Yeah. Yeah, 100%. I mean, who would? Who wants to go to somebody in their company and say, "Hey, I got something going on with me," right? Like nobody wants to do that,
No.
right? Like, "Oh, are they going to fire me? Are they going
As,
to
and same goes
reduce
with
my hours?" Or that, it's like,
Same goes with substance abuse. We were just on a
right.
call with the
Yeah.
HR director the other day, and I asked her, so, how many people in your organization do you think struggle with mental health or substance abuse? And she's like, well, we just had a situation recently
Right.
where somebody actually passed away. So they had a
Oof.
problem. They didn't get the help that they needed. They overdosed. And it wasn't until it was too late and they couldn't get them into treatment in time. And then there was a huge waiting list for treatment. And it
Mm.
turns out this person had been struggling it for a long time. And like the signs were there, but they didn't know how to recognize it. And this is,
Right.
again, they had a close relationship with this person, but this person was not going to come and say, I've got a problem.
Right.
And so when we can privately, right, through HIPAA privacy compliance, give them
Right.
the resources that they need, they're more likely to use it if they
Yeah.
don't have to come to you and be accountable for it.
Yep. Exactly, man. Man, changing the world, PHI.
One
It's
one business at a
unbelievable.
time.
Yeah. Yeah, man. Dude, super exciting stuff. Our goal is to get this into at least 10 million employees this year. I love the program. I love everything that it's doing. I mean, it's really gonna. I mean, it's gonna change the country. It's gonna change so many people's lives, and I'm just happy to be a part of
We're
it, man.
watching it happen every day, man. I'm grateful to
Yeah.
you and your team for being involved. We've got some big stuff to do this year.
Yeah, absolutely, man. Well, thanks for joining us. It's been a great conversation. We'll definitely have to have you back more with an update on how things are going. And dude, loving everything that you're doing and what we're doing to help Americans and not just save them money, but get them these benefits that people really need.
Yeah, the money is nice, right? The way we take care of our employees, it pays dividends. But
Oh yeah,
yeah, there's a lot of ways that we get to do all of that, and so it is. I'm grateful just to have the opportunity. This is my life's work, man. I've
yeah,
taken everything I've done over the years and built it into this, and it's a
yeah,
crazy unique model that it does the same. Whether you're a life insurance agent, a PNC, a broker, like we've got a system in place that can help you help your business and be the hero to your clients in a
yeah,
huge way. If you own a business, we get to put you in a position to be the hero to your team in a big way. And, at the end of the day, we were able to deliver gifts and savings, et cetera, that you didn't know. Literally, there is
right.
money sitting on a table waiting for you to come and claim it, right? You just got to have the right people on your team to get it. That's what we're here to do.
Exactly, exactly. So they can reach straight to Blue Wealth, reach out to us at Versa Business Systems. We can get you all the information that you need, get you set up and saving right away. I mean, how fast does it take to implement something like this?
Oh man, I think it's typically a 7-day cycle, for a new business. It goes pretty quickly when we get the right information the right way.
Right.
But yeah, again, definitely if you're any kind of broker, reach out to Shaheen so we could get you connected because there's an opportunity for you to serve your book of business. If you
Yeah.
own a business or you are an employee in a business, you're listening to this, reach out to Shaheen and get connected so that we can see if there's anything we can do to help you guys as well.
Yeah. Absolutely, man. You have a great day, bro. I appreciate you hopping on.
Thanks, dude. Thanks for the opportunity. I'll see you on the
Yeah,
other
man.
side.
All right.